Hello traders, today is the 7th of March. My name is Neville Hornsey, market analyst YouTrading, and today I'll be taking a look at the week ahead. Okay, we can start with the YouTrading.com Forex heat map. We can see here London sessions started with the bottom left-hand corner turning green, top right-hand corner turning red. So we're looking for moves into commodity pairs, maybe into equities, more of a risk on day than risk off. The US dollar is mixed, like down the middle. So it's stronger against the euro, the yen, the pound, and the Swiss franc. If you look at the Swiss franc and the yen, the Swiss franc is definitely weak. The yen has been weaker, and the euro is currently the weakest currency relative to everything else. And the Australian dollar is currently the strongest. There is some RBA news coming out this week, so we'll take a look at that. If we go to the economic calendar for the week, the tier one data is kind of thin on the ground. The focus is, under normal circumstances, Thursday, where we'd have the European main refinancing rate, their ECB monetary policy statement, and then the preceding press conference. That happens at the same time as the US releases the CPI and core CPI data. And we also get the US unemployment claims as well. So Thursday, like I said, under normal weeks would be the focus. We do also have this 30-year bond auction, which I've noticed that equities kind of hold off until we get that auction. We've also got on Wednesday the 10-year bond auction. So again, Monday, no real sort of tier one data to look forward to. So it's all news headlines that we'll look at. Tuesday, RBA Governor Lowe speaks. And then if we look again, 2 days later on Thursday, RBA Governor Lowe speaks again. So whatever happens on Tuesday is probably going to be more market moving for the Aussie, probably just a reiteration on Thursday. Come Friday, we've got Canadian employment change, unemployment rate. But as we look through the charts, we'll probably see that the Canadian dollar is being pushed around by something else. And on Friday, we've got the preliminary University of Michigan's consumer sentiment, which is due to come in, forecast to come in lower than previous. And I'd imagine we might even get a lower number than those forecasts. Okay, going to the news headlines. If we look here in the overnight session, sort of in the Asia Pac session, we had Chinese trade balance for US dollars in February, came in higher than expected and higher than previous. So $115.95 billion worth of trade. That was basically due to less Chinese imports coming in, and exports, unfortunately, were less than previous, but they did beat expectations. So in terms of trade, the US dollar is appreciating. China is exporting, but not as much as it has, but it's definitely not importing as much either. As war goes on, consumption is basically going to drop. So we're probably going to get a demand shock as well as a supply shock in the near future, which is, well, normally supply would diminish quicker than demand. In the terms of what we had with COVID, it might flip on its head, and demand might diminish quicker than supply because of war. If we look here, there is lots of news coming out of Russia and Ukraine. Lots of talk around open humanitarian corridors to let Ukrainian cities evacuate their residents. There is also a lot of talk around the US and other countries acting on bans of Russian oil supplies. But if we just scroll up, we did have news from Gazprom saying that they're continuing to ship through Ukraine. So there's still gas going through Ukraine. And the NG CEO said that Europe may not have enough gas for next winter in the scenario that a decision was taken to stop Russian energy supplies coming into Europe. So if we see that any of these pipelines that run through Ukraine, or Nord Stream 1 is turned off, then the European energy suppliers are saying that there just might not be enough gas come the winter. So that's going to be a major worry. But the sort of paradox is, if we keep taking oil and gas from Russia and trying to fight them, then we're basically funding the Russian war effort. All right, going to the active trader platform. Because there was a lot of talk around oil, we can see here that Brent gapped up to around $123 per barrel. It then proceeded to go a lot higher, up towards $135 per barrel. We are above the 2.618 extension. And for me, now that we're in these sort of levels, we could easily go up towards $150 per barrel. In context, that would then get above the previous spike high in July 2008. We're currently at levels where, if you see here, for June 2008, before the GFC, we saw oil prices at these levels. Then that sort of final push. So these buyers who were talking about peak oil and such like, obviously sort of bought into there, only to have their position rolled over the next month. That could happen here. Obviously, if we get towards $140 per barrel, people just stop buying oil. They just can't afford to buy it, which then has a knock-on effect for industry and consumers. All right, going back to the active trader platform, if we go to the sentiment indicator, 84% of traders are also trying to go long oil, 16% are trying to go short. When it gets to 84%, that to me is a big red flag, and we should be looking to go short. And like I just sort of showed you, we are at the upper end of resistance. So a pullback before going higher would probably be my best bet. But at the moment, not chasing prices at all. In terms of Canadian dollar, which is obviously highly correlated with oil, we can see that Euro CAD, we've got the Euro CAD, 80% of traders are trying to go long. And if I just go to the Euro CAD chart, the Euro CAD last week was on our radar. I did sort of say that we could come down towards these green boxes that I highlighted and down below the 1.3. That looks like that's happening now. We've taken out the lows of the swing low here from 2017, 2016. And the next place for me, like I said last week, is the 1.3. So if you are going to try and go sort of long oil, it might be better through the Canadian dollar. Like I said, we've also got commodities rising in terms of, relative to other Forex pairs. And we've also got RBA Governor Low speaking. The next sort of resistance level for me with the Australian dollar versus US dollar is this low here from October, November 2021. So just below the 0.7485, I can see the Australian dollar rising to test that. Obviously, if we get above the swing high from October 2021, then we're looking further left, take out these swing highs up here, and then into this imbalance and around 0.77. So that's how I see the Australian dollar playing out this week. I think another bump up into the 0.745 area. Going down to the euro versus US dollar, the euro is obviously the nearest currency to the conflict in Europe. Obviously, the Ukraine is, a trading partner, if you like, with Europe under certain circumstances. One of the reasons why Russia's adamant that Europe doesn't get any more of a foothold in Ukraine. And we can see here that there's flows out of the euro into the US dollar, because the US dollar is the safe haven in terms of the global reserve. And the rest of the world just needs to sort of move their cash into a place where, there's going to be some sort of safety. So the euro for me coming down towards this low here, the swing low around 1.07, possibly to take out the swing low and the 1.06. The dollar itself, it's bumped through the weekly market structure. It's going into this daily resistance around 99 and 69 cents. But I think the biggest level obviously is $100, and that's probably the sort of place where any traders that have bought from the $96 down here would probably start taking profits around the $100. The DAX 40 has dropped more than 20% now. We can see here that there's from the highs in November 2021 to 13,000. That was a 20% drop in price. Now we're sort of trading into this sort of swing low here, sort of area. So I think the DAX itself could come down to below 12,000. It could even come a lot lower, depending on how long this conflict sort of carries on for. Euro versus the pound, that's gone through the two sort of swing lows here. So this double bottom sort of around the sort of equal lows here, 0.828 to 0.827. That's been broken now. So yeah, now they swept those lows. We have to look a lot further left, and we're back into the Brexit 2016 imbalance, which means this market can come quickly down to the 0.78. Gold, in terms of safe haven, I'm not 100% sure why the store of value in gold is rising towards 2000. There's obviously a lot of gold bugs that have been waiting for this for a long time. At the moment, I think the US dollar is probably the safest store of value at the moment, just because more countries need liquidity, and the US dollar is the easiest, in terms of cash, easiest to convert. Gold, central banks like the Russian central bank had been buying more gold. There was talk about the Russian ruble being fixed to gold, so it becomes like a gold standard. We have to wait and see what happens here, but I'm starting to become quite suspicious of gold. 74% of traders are trying to go long. We are coming up to a resistance level around $2018 per ounce. So if we get there and I see people taking profits, then I'll be looking for a bigger move back down. However, obviously, in the past, gold, has been good against inflation, and yeah, we just need to see what happens when we get towards these upper levels now that we've taken out some swing highs. Dollar CAD, probably going to go sideways because of the flows into the dollar and into the Canadian dollar for two different reasons. Now, what we need to be aware of is the VIX, the volatility index, obviously at elevated levels now, sort of similar to January 2021. The ranges expand and stops get taken quite quickly when it's this volatile. Okay, that's kind of it for the week ahead and where I see the markets at the moment. I think everything to do with oil is probably the key focus Monday, Tuesday, Wednesday. And then, like I said, come Thursday, depending on what's happening in the Russia-Ukraine news headlines, focus might move towards the euro and then onto US inflation. Okay, good luck, and I'll speak to you again later.